The idea behind this is to radically change how people report their tax liabilities and how the tax administration works. And the aim is to actually make the whole system more effective, to make it more efficient and easier for taxpayers. And the way that they are intending to do this is through the implementation of a fully digitised tax system. How you keep your records has largely been up to you, but in future, records must be kept on software. The Revenue were trying to do away with spreadsheets, which is a favourite of many taxpayers and accountants, to be honest. But there was such an outcry against that they've now said that spreadsheets can be used as part of this process, but that they will have to be compatible with HMRC's software, otherwise they won't be used. Under the new regime, you will submit a quarterly update to HMRC, and potentially you will align the time period for that quarterly update with your VAT quarters if you are within the VAT regime. The quarterly update will, in theory, be the results that you have been keeping on your bit of software, and in the Revenue's mind, you will just click update on a quarterly basis, and this information will flow up to HMRC. They will then take that information, put it on a personal tax account for you or your company if you're incorporated, and you will see what your taxable profit is and what your potential tax liability is at every quarter. You then have an end of year update, and that must be submitted within 10 months of your year end. Now the information in that update will be what forms your actual tax liability and what you will have to pay tax on. Moving forward, the Revenue are going to encourage you to voluntarily pay as you go. So if you submit your quarterly update, you will see what the tax liability is at that point. And the Revenue think it would be a good idea if you perhaps put towards that liability at that point. Now, they have said at the moment that it is not mandatory to do so, but you don't know where this is going to go in the future. And there are actually issues with the payments that you will actually make to HMRC. What they have currently said is that they will take your money and they will allocate it against the liability that is basically the oldest. And during the consultation process with the professional bodies, there has been concern that might not be sort of correct. We may not want to pay a particular liability. We might want to pay something else because the other liability might be disputed. The other main issue is that the Revenue won't give you interest on any payments that are made. So really, at the moment, the best bit of advice would be to, when you're submitting your updates, is to look at what the potential liability is and potentially set that aside yourself. So open another bank account, perhaps solely for tax purposes. Hopefully it might pay some interest, and just store it there. And then when you have to pay a liability, that is the point that you pay it to HMRC. That gives you obviously more control over your money and perhaps gives you some element of interest on it. By April 2018, for unincorporated sort of businesses and landlords with turnover above sort of £83,000, you will need to start using this process. If you haven't got turnover above that, then you will have until April 2019, but that's still actually quite soon if you're trying to adapt to new working procedures and perhaps new software and new ways of thinking on this subject. April 2019 will also be rolled out for VAT, and April 2020 for corporation tax. Currently, you can report in two ways. There is the sort of accounting concept of accruals and prepayments and using accounting standards and procedures. But the Revenue understand and love the cash basis because it just sits better with them. Cash in, cash out, net, you pay tax on, the end. Now, to encourage people to start using the cash basis more frequently, they've extended the range that people can actually, the limit for people that can use it. So now if you have cash receipts of up to 150,000, you can opt in to the cash basis. There are a few entities that can't, such as companies and LLPs. And the cash basis does fit better with digital record keeping in that it's just easier to submit on a quarterly basis, money in, money out, without having to worry about any accounting adjustments that would normally have to be made. You do have the option to elect for either the accruals basis or the cash basis. So if you are a landlord and you jointly own a property with someone else, you can actually have two bases. So one person could want to submit on the cash basis and one on the accruals basis. If you're married, you don't have that option. You both have to go one way or the other. Unincorporated businesses are also going to have to do the same thing. They're your sole traders. They again can use the cash basis, and the entry threshold to use that has been increased, or will be increased, sorry, to 150,000. Once you're in the cash basis, they won't chuck you out until you reach 300,000. The benefits of this new regime is, as been pointed out by HMRC, is to give the UK the most digitally advanced tax system in the world. And the idea is that this will reduce errors, which the revenue estimate are approximately 8 billion a year. They want to encourage people to get their tax liabilities right first time, and their feeling is that if you are using accounting software, then this will help you by forcing you or encouraging you to put the right figures in the right boxes. So if you put something in the wrong place, there would be a nudge or a prompt that would come up that would say, no, I think you've got that wrong, put it somewhere else. They're also very keen to make sure that people are sort of taxed in real time. So at the moment, a lot of people can go through 12 months, submit their financial records to your accountant, we'll prepare it, and then we tell you what the liability is, and that can be a shock. The revenue would prefer that you knew as you go what your liabilities are, so that you perhaps put money aside and pay them. And this will certainly, if this works, this will certainly achieve that. The revenue also want to make use, or better use, of third-party information. So, for example, an employed person will receive a pay slip each month, and their employer will obviously transfer to HMRC details of what's been paid and what tax has been deducted. What the revenue will now do with that information is that they will take that across to your personal tax account so that you can see this information at the same time as pretty much your employer. The idea is that when you log on to HMRC, you will have one page which has got all of your tax liabilities on it. So if you're a business, if you're a limited company, you would see your corporation tax, your VAT, your PAYE, all in one place. At the moment, you have to log into different screens for different taxes, which is confusing. The most controversial, in my view, the most controversial point of this is the end of the tax return. So you will no longer have to submit a corporation tax return or a personal tax return. The reality is that although those documents may cease to exist, your end of year return that you're going to have to submit is perhaps pretty much going to be the same thing. The other benefit from perhaps my point of view as an advisor is that we might get better planning opportunities with each person, because if you're having to submit information on a quarterly basis, we will see what is going on more readily in your business, and if there are transactions coming up, we might be more aware of them, and there might be more planning that can be done around them. The sort of start time of April 2018 is very tight given the uncertainties that still exist around the whole process. When it's time to go live on the first day that it starts, HMRC systems usually fall over. I mean, the last time that they did something major was with pay-as-you-earn and real-time information reporting, and that was extremely difficult for a prolonged period of time, as the revenue system sort of struggled to deal with what they were being given. And this is far more dramatic and all-encompassing than that was. So we're sort of, if they are going to keep to this timetable, we just have to cross our fingers and hope for the best.